Next, so basically we are moving into how liquids is going to meet global market demand, and we're going to have on stage Adam Beck, CEO of Blockstream. Here, see Adam, right? Please help me welcome Adam with an applause. Michele again is gonna join us too. And then we will have Sagun Garg, Director of Enterprise Solutions at Blockstream. And then finally, Federico Suarez from NexBridge. Thanks for switching this off because you can get blinds. I'm going to grab a chair. Actually, I'll just stand. Make it easier. Okay, good. So we have this panel, then the fireside chat with Stace and Max. And then a little surprise with an award, and then we will go for a drink. Grazie. Thank you, Sagun. All right, so Adam, let's start from you. So we have heard from Michele before about how NexBridge is leveraging liquid network in bringing tokenized assets globally. Can you maybe from a protocol and infrastructure perspective, what design decisions make liquid particularly suitable for regulated and institutional capital markets? I think, thank you, Michele. I think the audience may be interested in hearing that.
Yeah, so I think one thing that Liquid does very well that other networks do not is have a simple and elegant way for people to transfer regulated instruments, which have effectively a share registration agent, an enrollment process, and potentially some restrictions that it can be bought in some countries and not others, or by accredited investors and so forth. And Liquid does it in a way which is putting very little data on the chain. So it doesn't put the registration information, any private information on the chain. It just has a multi-sig. One of the signatures is from the share registration agent, and it will sign if it's satisfied about the information that this transaction can happen. So that's one thing Liquid does. And it's also, because it's based on Bitcoin technology, it's security and robustness focused. And of course, that kind of technology is something that all exchanges and so forth and many developers are familiar with, because programming against Liquid and Liquid APIs is almost the same as doing that against Bitcoin APIs. And so then within Liquid, you have very simple ways to do secure and trusted swaps, even if you have that settled by the exchange. So you can either do that with a custodial platform like NexBridge, or you can also do it with a non-custodial platform like SideSwap. Bitfinex Securities is another custodial platform. And you could even mix the two. So you could have orders that are non-custodial within a custodial exchange. And the point there is that you have some native support for atomic swaps with limit orders.
Thank you for that. So I think let's maybe pass it to Sagun. He has a very consolidated background in the traditional banking sector. He's recently joined Blockstream Enterprise Division, so congratulations for that. So I would love to hear a bit of your your experience when it comes into private banking. What are the concerns around privacy, governance, and sensitive data? Why those are paramount? And based on your experience, what architectural principles must be in place for banks to feel comfortable deploying Bitcoin-based market infrastructure, and not just pilots? Let's see what happens. Let's see how it is.
Thanks. So definitely we are at an inflection point. Market structure bill is being tabled today, interestingly enough, in the United States. And I think what we are seeing is we're past the POC phase. The whole institutional space, enterprise space, is trying to now kind of clearly move into the direction where they want to productionize and adopt some of these technologies. And there is a buffet out there in terms of different chains, different asset tokenization capabilities. But I think going back to the question, right, like what are the architectural first principles that we should be considering from a bank standpoint? And I speak from experience from Julius Baer, where I come from. So most of the banks are kind of today looking for 5 things, is how I kind of see it. Obviously, the first one is finality. Everybody talks about finality of transaction. That's the first question you would get if you kind of work with any banks. The second one is around security, which obviously because of modern cryptography being involved, everybody wants to know whether my assets are secure enough or not. The third one is around how fast the transactions can be. And typically the narrative has been only around these 3 if you look at historically any conversation. I think where the things change is the 4th and the 5th one, which is compliance and regulation. And by design, that brings in the question of jurisdiction you're talking about. And then it takes it to the next level through risk. How do you manage this risk? If you can't manage the risk, banks don't understand it. That's traditionally how they've operated. So I think we're there now where potentially all the chains, if you look at it, they don't have these 5 things that we're talking about. And compliance and risk is all a lot to do with also how confidentiality can be implemented. Like I think Adam already highlighted. From a regulator standpoint, I want to also know how will you end up managing risk for transactions that we don't believe should be part of the system. And that's where I think being able to look at confidentiality is one of the biggest features of Liquid. You can try and pick up any chain, and I don't see anyone meeting all the 5. It's only Liquid out there that can give you that capability with simplicity also coming in. So simplicity is what we've launched last year at Blockstream, and it's basically now live on mainnet. It brings that programmability that you're looking to do smart contracts. So all the high assurance, 50 billion is the TVL in the second smart contracting language that I know, and Liquid is the second most one, which is 6 billion. We're not even getting started. Look at the numbers. If a TradFi bank were to enter, they would do by themselves of the order of $100 billion. Right. So it's a wide space, open, ready to be disrupted. And if the regulation, like the market structure bill, comes in play, every bank is going to start looking towards a technology. And I think Liquid is primed for that. We've gone through the 0 to 1 phase of Liquid, where we have demonstrated different capabilities on the enterprise side around tokenization, around simplicity as well. And I think it's about stepping it up to these big size enterprises who need this kind of technology.
Yeah, and it's an extremely important point, which I'd like also to hear from Federico, who has been a chief banking and institutional relations officer at NexBridge. He comes from a traditional background, ex-Citibank. So question would be, before I pick up my phone, so from a banking and institutional relations standpoint, what do you think, what type of mindset shifts, we should see, or we should, let's say, help and support the sector in order to seriously engage with Bitcoin-based settlement layers?
Thank you, Luca. Coming from the banking world, and I mean almost or more than 3 decades in the banking world, I can say with confidence that there are 2 key things banks are. They're conservative in nature, and they're slow to adopt technology. Having said that, they're already here for the on-chain and Bitcoin ecosystem. And I think what we need to show them in terms of capital markets is that this is the real deal. But for that, we need to show them the killer app. We need to show them a robust architecture that complies with all their policies, that is confidential in nature, that is secure, as you say, and that gives them trust. And for that, we need a lot of work in terms of evangelizing. And I don't think we have been that good at that, to be honest, because we've focused on other attributes of the Bitcoin ecosystem. But we forget that the financial institutions, the capital markets, as Sagun said, they need certain particularities of an infrastructure in order to trust it and use it at scale. And I think, luckily, we're at that point. And I think Liquid brings that. And we at NexBridge want to take that to the next level. Because I think from El Salvador, we can create capital markets at scale. But we need to do many things. We need to work in a lot of things at the same time. And it's a lot about education. It's a lot about bringing the people into the ecosystem. Because when you talk to institutions, you're not only talking to the person that you have in front, that probably is the first person that you have already convinced it's worth doing it because there's something valuable for them. You need to convince a series of stakeholders within these organizations. There's people illegal, there's people in compliance, there's people in risk. There's a lot of people inside the organization.
It's an array of different minds, different cultures, but working together, like talking about business culture, talking to and kind of building a narrative or building, let's say, a message that is going to, let's say, resonate with each single category. It takes time. So this, I think, kind of brings me, very nicely to, to Michele and ask him, what gaps do you think, Michele, NexPlace solve the traditional market infrastructure simply cannot? And, somehow you already kind of mentioned this in your earlier presentation, leverage liquid, but can you maybe deep dive a little bit more into that?
Sure. I think there is no universal answer to this question. It depends on which country you are asking me this. But
well, let's stay in El Salvador since
no, but it's interesting because I could tell you that in Western countries are using blockchain to basically increase efficiency. They are, trying to reduce costs, but this doesn't automatically convert in a benefit for the end clients. So if you ask me which benefit could provide NexPlace or NexBridge in Western country, my answer is very specific things. Because Western country doesn't need to solve the problem we mentioned before. So I could tell you, yes, we are the ones that are providing this kind of digital exposure with portability and rights on Liquid, which is super safe. This is an added value. Right. But I'm not sure that common people will understand the value as of today. So there are for sure nice features that we can leverage through NexPlace in Western countries. I'll give you an example. You have the power to create your own pairs. So, for example, if I create a pair Bitcoin against USDBL, and I put a limit order on the order book, while I wait the order to be executed, I'm generating a return.
Right.
That's great. That's not for everyone, right, but that's a feature. There are many examples that I could do, but the topic here is that NexPlace and NexBridge as a market infrastructure can really have a huge impact here in Latin America. And the traditional market infrastructure can support this. Why? Because in order to evolve a product, like many others, like I mentioned before, there are Xstocks, Bwiddle, amazing products, gives you rights, no portability. That's not interesting. And potential competitor of actual issuances could be Kraken. Okay, cool. But what if we merge? Because usually you need to choose between rights and portability. What if you don't need to choose? This is where I think we can add a lot of added value to the market.
No, it's fantastic. And then this kind of brings me to Adam asking, so we have builders here, like the likes NexBridge and NexPlace, which are really building a really valuable use case for Liquid. So, Adam, what do you think, what would you believe Bitcoin-based settlement layers in the future, 12 months, 18 months, must add to meet institutional expectations? Without compromising Bitcoin's core principles.
Yeah,
Hint, hint.
So I think one thing which is relatively new post FTX is that a lot of institutional traders and hedge funds and so on are concerned about exchange custody risk, and that is where custodians are forming part of the picture, where they will custody the Bitcoin or the stablecoin or even the securities, bearing in mind that in traditional world, if you're trading on E-Trade or Schwab, they don't have your shares. They're held with an independent custodian. So that model has come to the Bitcoin trading world, and there are companies like Kamainu, who's in the audience, who are doing that, in fact, and integrating with Liquid so that you would be able to do that. And the piece that sort of squares the story there is that there's it's called a trilateral arrangement where the custodian holds the assets, you, the trader, have the legal ownership of those segregated assets, and then they are pledged to the trading platform with the proposition that a legal contract protects you from an FTX-like insolvency. And so I think that is becoming a quite important part of the picture. And then, of course, in that environment, the settlement is a little bit different because there's kind of reconciliation or true-ups with the custodian if there's a margin call and things like that. And ultimately, the user's asset, there's a third party in the picture, which is the custodian. And I think that, of course, you have the non-custodial trade that we mentioned with SideSwap. Exchanges can also, match custodial trades and non-custodial trades, but also mix in custodial trades. So we see custodians forming part of the picture, actually.
So on the custodian side of things, and which of course it would be one of the, well, now those are going to be seen as extremely innovative solutions, but in very near future, maybe in 5-6 years time, they will be kind of standard services that the bank would offer. This is a question for both of you, Federico and Sagun. So what internal concerns, considering your background in traditional finance, what internal concerns do institutions raise most often before engaging, and which concerns they tend to, let's say, disappear once they actually onboard and operate, or evaluate solutions on Bitcoin?
So I think segregation of duties, 4I, 8I principle is something you keep hearing in the banking world.
Right.
And I think typically most of their concerns emanate from that requirement to start off with. But eventually when you start kind of discussing with the progressive ones that really understand this space and the technology behind it, they really start to kind of understand that this is not like a 1x, 2x jump, but a big leapfrog in terms of the technology they've been using traditionally in the banks. Right. So I kind of imagine this, that you have a big floor where you have a lot of compliance and risk folks trying to do a checkbox kind of an activity on a paper to say, okay, I've looked at this and this works, and I've looked at that and that works. And then you go to a regulator and you do a similar activity. What they don't realize, and I think once you kind of drive that education piece with them, is that all of this is structurally designed inside. You don't need to sit back and do a checkbox activity. For all you know, if you want to do it, like be my guest, do that. But the risk and the compliance aspects are inherently designed in the system if you really look at this technology. And I think that's when they realize, oh my God, this is not a 1x, 2x leap. This is a leapfrog technology that will enable me. And I'm not surprised now, like the narrative in the United States today is around, like, let's just remove all the outdated banking tech and let's start with this kind of new modern technology. I think that is going to come so fast at us now that we all will be overwhelmed in that sense, because everybody's just been giving the excuse of a lack of regulatory clarity. And I think that once hits, you've seen it. ETFs, stable coins, it's just like hit us in 1 year and everybody thinks it's overwhelming already. That's going to happen with a lot of this tokenization as well as a theme this year. It's just,
and customers are looking for leadership, for direction, and
the banks banks don't know how to run this technology. Yeah. I can give you a first-hand certified answer to this, that they can't deal with this cryptography. They know it. They are very acknowledging about it, and they look towards outside players who have leadership. And I can tell you, this is going to be a winner takes it all. Like the kind of technology, like protocols, technology behave in this fashion. Anybody who understands in that leadership position what has to be done, they define the pathway and it's taken by that player in the market. So I think that's the opportunity at hand, I would say.
Thank you, Sagun.
So, Luca, I would say something that we Latin Americans know.
Do we need to turn off the cameras? Or because you started like very dramatic. I said, Luca, hey. I'm like, whoa, okay, come on.
Una golondrina no hace verano. So,
For the non-
basically, us in the Bitcoin ecosystem need to evangelize. And it's fair to say the other protocols have been way better at that than us. And from there, I come to what the financial institutions, capital market players know, which is trust. They trust the institutions that provide the guardrails.
Right.
So when we start to speak about trust minimization, that key feature we are bringing to this new world, we must be very emphatic that we are different and better by design. And that means that I'm pretty sure I can place a big bet on believing no bank will put their trust on any single foundation. And that's at the core of what our design is. So when we start to build on that trust, when we start to help these institutions understand those key features of that infrastructure that we're building, thanks to Liquid and to the vision we have of building that highway, the institutions will really understand that there is an opportunity there that will provide them efficiencies with security, with finality, and with the confidential nature of the transactions they need for their day-to-day business.
And we were having conversation yesterday at the NexBridge office with Michele, and I'm just going to take just advantage now that I have the microphone. I just want to say my 2 cents on this. Absolutely right, and I think that the narrative will change and evolve, where now for the past 15 years we have been learning what Bitcoin qualities are, which are extremely important for human beings, and now we will see these, let's say, 3 pillars. One are the, what we all know as Bitcoin qualities, the fungibility, the non-censorship, the resistance of it, and so on and so forth. But now we need to build for this sector the other 2 pillars. One was kind of very well explained, unfortunately only in 20 minutes, by Giovanni Santostasi, but then deep it down a little bit more. So in the panel on how we need scientific, even to provide to this sector, scientific proof, scientific documentation that explains why Bitcoin is different from any other asset. And then, again, so providing academic approach. And then the third pillar, which I think will be the last battle that we're going to win, is around technology infrastructure and how the Bitcoin technology infrastructure of the future will be plugged in and pre-integrated in the core banking system. Because we should forget about it that you're going to have banks trying to use a switch to a different infrastructure. We need to make their lives super easy by plugging in the Bitcoin infrastructure into it. And we have, beside layer 1 and all the layer 2s, we have amazing other, let's call them, allow me the terms, middleware type of solutions like Breeze and Bolt that can really help us to make life much easier in terms of integration. So I think these would be the 3 pillars: infrastructure, resilience, Bitcoin, qualities, and of course, the scientific proof about power law. And that's it. That's my 2 cents on it. So very last question across the panel, starting Michele, Federico, Sagun, and then we close with Adam. What must happen? If there is one thing that must happen over the next 12 months for Bitcoin-based capital markets to scale meaningfully beyond early adopters, what that thing should be?
I think we need a killer use case, but I'm biased.
All right.
And then no, but it's real. It's true because I mean, if you solve real problems, then you increase the adoption. Liquidity is coming into the liquid blockchain, and then it's kind of a volano, you know. So I think this will happen. This will happen sooner or later because, like Adam and Sagan mentioned before, liquid has been built for capital markets. And now the legal framework is supporting the expansion of capital markets on Bitcoin. So I think this will be a natural evolution, and we will do whatever it's needed in order to continue pushing for let this happen.
Thank you, Michele. Federico.
I would add on what Michele said. Yes, I think we have that killer use case. Yes, we're building from a platform for the world, and we really need to make a big effort in order to help institutions, investors to understand that the infrastructure we're building banks on all the attributes they require.
I think for us, I think it's very simple. There's a whole constellation of different companies, startups that are building already with liquid, and they're proving what it is. We just need a couple of them to fly off, and then banks to realize that, oh my God, there was a big killer use case out there, and it happened on liquid. And if we don't do it quick enough, I think the world order will change with the new kind of banks that will come across. So I think it will play out automatically. There's a lot of people working on liquid already. And I think it's for the bigger enterprises to understand that they want to kind of use this technology to reinvent themselves. Like a lot of 100-year-old banks do this progressively. They reinvent themselves. If that is on their mandate to their shareholders, if they want to survive the market, they should be looking towards technologies that will really provide them leadership and not go into the cacophony of the marketing departments of other chains. That's the only thing they do well, by the way. They don't do anything more than marketing. So I think adoption will define that for us. I think that's how I see it.
Thank you, Sagun.
Yeah, so I think as well as the enterprise integrations that Sagun was mentioning, I think the other opportunity is for the Bitcoin exchange ecosystem to bring the crossover assets to market. And that's what Michele's doing with NexBridge. That's what Bitfinex Securities was very early in doing. And, you know, Kaminu bringing in the third-party custody into the formula, which is a necessary and standard way to do it in traditional finance. Those are all important ingredients, but I think a potential kind of, there's a gap in the market, if you like, for the securities that are of interest to the Bitcoin trading community. And I think those are effectively the treasury stocks because they are a new kind of Bitcoin derivative, right? And you can see that there's many billions of dollars of actively traded funds between hedge funds and individuals in the Bitcoin ecosystem. And I think they're going to be much more interested to trade Bitcoin treasury stocks versus Bitcoin with margin 24/7. And it's extremely hard to do that with traditional rails, at least for the individual, because you've got, markets are only open about 20% of the time. The margin available is extremely low. So I think on CME, you're looking at about 50% margin, whereas on the Bitcoin exchanges like Bitfinex, NexBridge, etc., you've got margin up to 10 times and perpetual futures up to 100. Not that anybody would actually go to the full limits, but it shows you that you have extremely efficient access to capital and liquidity. And so I think if that all comes together, that's providing something that will even pull people in from the traditional world to get access to a better trading environment for these types of securities. And there are, obviously traditional finance funds, like even the Swiss National Bank owns treasury stocks. So if that starts to be the 24/7 price discovery for those instruments, you need 24/7 to have this kind of high leverage trading, and that liquidity, I think, will, could become a significant part of the price discovery for those markets. And also, ultimately, that liquidity will help those treasury stocks and Bitcoin indirectly as well.
Fantastic. Thank you very much, gentlemen. Thanks, Michele, Adam, Sagun, Federico. It's been a pleasure chatting with you all. Round of applause, why not? So we're going to move to the last panel, well, fireside chat. Yes. Do you want to take a picture? Okay. All right. This is completely, yeah. Very thoughtful. Thank you, Federico.
Let's see what happens next year.
It does. So.